Hi, this is Tim Blanchett with Divorce661.com. Today we're speaking with Todd Stelnick with LBW Insurance and Financial Services. And today we're talking a little bit about divorce and life insurance and how the two kind of interplay together. I wanted to have Todd on video today because he brought up an interesting point of, insurance should be possibly something you should consider when going through a divorce. Before we get into that, Todd, maybe you could just tell us a little bit about your company here in Valencia, and you had some interesting facts that it's family-owned business and whatnot. So if you wouldn't mind sharing that with folks, give them a little background about the company and maybe yourself.
Yeah, we're a family-owned business since 1922, full lines of insurance. We do anywhere from life insurance, long-term care, disability, group health care benefits, individual health care benefits, to commercial business insurance, personal lines, home and auto and earthquake insurance, and also financial services. What I specialize in is controlling individuals' risk, and by implementing a life insurance or a long-term care or disability to protect individuals for all different circumstances.
So you guys pretty much do everything. Is there anything you guys don't do, insurance-wise?
Nope, that's everything we do right now.
Pretty much everything.
Pretty much everything.
Okay. So when it comes to divorce, we're talking about issues of, say, if there's spouse support being paid or child support being paid. There should be some consideration as to looking into protecting the spouse who's receiving spouse support or child support. Is that correct?
That is correct. Nowadays, most judges and attorneys are recommending a life insurance for the spouse that is really the bread winner, the more the financial aspect behind the family, for the protection of the kids. That's the risk involved, that if somebody stops paying a certain amount of money, rather if it's child support or alimony, where are they going to get this money to fulfill that prescription? We fulfill it with a nice, easy life insurance policy.
So let's run maybe a scenario. So let's say husband worked, wife didn't work. We see that quite a bit. There's an order for spouse support and child support. Let's talk about child support first. What is generally the recommendation for like a term policy? How would you calculate how much that would be in child support? How long would the term be for? What are you seeing? Because you said you've been writing some policies for some divorce cases. What kind of terms and how are those decisions made?
So if you have a kid that at age 2 through 5, or a couple kids, you really want to do a term policy that would take you just a little bit over when they reach the age of 18 years old. So maybe a 15-year or 20-year term policy, depending on the kids' ages. That way, if something happens to the husband, then the wife will get a certain amount of money towards the kids, and the kids would be the beneficiaries. Or we would write a policy where the beneficiary is the wife with a contract saying that this money is for the children. Costs in a term policy is really not expensive at all. You're looking at anywhere from maybe about $500 to $700 to at most $2,000 per year annually. And it's really a cost-effective way where if you're paying over the course of the next 12 to 15 years for your kids, $200,000 to $300,000. It's a really easy way where if something happens, God forbid, at some unknown time, that you'll still be able to get that money until your kids reach the age of 18 years old.
Yeah, so it sounds like it's really important that if you have a spouse who's the sole income earner in the marriage and is now paying child support and spouse support, if they die without an insurance policy, essentially the spouse that wasn't working and who was receiving support the money will stop coming in altogether, and that's why this is so important.
Correct, because what we want to make sure is families out there don't change their lifestyle, and we want them to continue to change their lifestyle, or continue to have their lifestyle going. So we don't want their kids that are playing sports to not play sports because they don't have the money to play in it, or take extra tutoring classes for education. We want to make sure that they have the money to make sure that they're still doing the same lifestyle that they're doing, just as if that individual was still living.
Okay. Could you give us an idea of how you would calculate support, or should I say like a term policy? How are they going to know how much they should, how much of a policy they should buy?
So if somebody is paying a child support $1,000 per month, and their kid is at the age of, 8 years old, they would at least need to cover at least 10 years. I always say let's cover 10 years and a couple more some. So we just times, just to be easy math, 12,000 by 10 gives you $120,000 of death benefit, which is what we would want to cover. You would probably put in a total over the course of 10 years, if you don't use it, maybe about $20,000, $30,000 at most. And if, God forbid, something happens, then the children would end up getting the $120,000. So that's how it kind of works for everybody.
Okay, so I think that was some great information if you're going through divorce, to keep that in mind. If you can give Todd a call, can you let folks know how they can get a hold of you?
Yeah, you can get a hold of me. My email address is Todd, TODDS, @LBWinsurance, all spelled out, .com, or you can call me at 661-702-6009.
So make sure you give Todd a call if you are going through divorce. You get some quotes from him. Probably cost you not much at all to cover your children, make sure they're taken care of should something unfortunate happen to you while you're paying either spousal support or child support. This is Tim Blanchett with Divorce661.com. Thanks for tuning in, and we'll talk to you soon.